What's going on, everyone? About 80% of stocks in the S&P 500 closed up in the green today, and we are now heading into the most exciting part of the week as we have some big events on the schedule, and the S&P 500 is now less than 1% away from a brand new all-time high. So in today's video, we're going to cover everything you have to know about the market right now, some great setups to keep on your radar for tomorrow, and some interesting news to be aware of. But besides that, Tom, let's jump right into today's episode.
Yeah, as you can see, the SPY almost looks like a heartbeat monitor today with the way it was moving. So at open, we actually started to break above and out to new highs of the week, which was awesome. We saw 560 and 561 really give out, but the SPY just couldn't really get anything going today. And Mike, the talk of the town was the jobs revision numbers. I could not believe that these revisions caused as much of a stir as they did. But initially, the jobs numbers were set to come out at 10 a.m. Eastern time, and it ended up getting delayed. Even Unusual Whales and other outlets were posting about this, like Market Watch and others, and it ended up causing a bit of volatility in the SPY. We did end up seeing those job revisions come out, and the SPY started to fall off a little bit before recovering end of day, but it was a pretty choppy, volatile day for the SPY. There was definitely a lot of price action to be had, but looking more closely at these revisions, Mike, I don't know what's going on with the government, but how do you revise payroll growth down by 818,000 jobs? I mean, come on, you could talk about missing the mark a little bit, right? Like a 5 to 10% margin. They missed by 30% almost. That's insane.
Yeah, so for those of you who don't know, basically the government today posted a revision to their already posted payroll data. And like Tom said, they were off by 818,000. This is the largest miss since 2009. So basically what this means in a practical and useful sense for everyday trading is, as we see these economic data reports come out, especially non-farm payrolls, be extra skeptical going forward, because the government has just been just a little bit off lately, just a little bit. So with that being said, this does affect the market in an interesting way, in the sense that traders going forward are going to be, one, more skeptical of economic data that gets reported and released. But for the current moment, now this is a little bit of a worrying sign, because the government basically made it seem like the job growth was a lot stronger than it actually is. So now Jerome Powell and the rest of the members at the Fed are like, okay, yeah, we should probably cut rates pretty soon, and it just changes the dynamic at hand. So that's the interesting stock market story of the day, and it's somewhat entertaining as well. But talking a little bit more about Jerome Powell and the Fed, because he does have a pretty big event lined up for Friday, we did have an FOMC minutes report today, and Tom, what do you take from this?
Yeah, as the headline says, the good thing about it is that it looks like that rate cut is likely to happen in September. And whenever I read through this, I thought that this paragraph here was the most important. It says the vast majority of participants at the meeting observed that if the data continue to come out about as expected, it would likely be appropriate to ease policy at the next meeting. And I think that's a really good statement there from the meeting, or from the minutes, obviously. And whenever I start to think about this, I'm like, okay, so they're expecting a rate cut. Now, to me, Mike, the big question now, and let me know in the comments what you guys think, is, are we going to end up having a 50 basis point rate cut? Or are we going to have a 25 basis point rate cut? As you can see right here, they're actually pricing in a bit more of a 50 basis point rate cut there in November right now. So nonetheless, Mike, this is kind of like what we're looking at here in the short term, and I kind of hope that that ends up happening. But nonetheless, it's good to see them pointing towards a cut in September. And just keep in mind, guys, that all the data coming out before then might skew what they do as well. Because like they said, this data has to come out about as expected.
Yes, and these probabilities are always changing. So, like, as of right now, the soonest rate cut is expected to happen on September 18th, and there's like a 63.5% chance that that will be a 25 basis point rate cut. So keep that in mind, but also understand that Jerome Powell's speech at the Jackson Hole Symposium will also have a pretty big impact, not only on rates, but also the market over these next couple days. So tell us more about that.
Yeah, it's a huge event. Everybody's been waiting for this week, and we've went back and looked at other scenarios in the past where this has moved the market quite a bit, but Powell will be giving his speech from that event on Friday. It is a multi-day event, but Powell will be speaking Friday, 10 a.m. Eastern time is what they have slotted. Hopefully they don't delay it like they did with those revision numbers today. Hopefully not, but nonetheless, it's pretty big. Central bankers from around the world are going to be meeting at this, and some people like to put on the tinfoil hat and say, hey, what are they going to talk about behind closed doors? Are they going to collude on anything, etc.? Obviously, They probably should. They probably shouldn't. I don't know. Either way, though, that's what's going on. It's going to be a big event, and it could even be big for, other parts of the market, too. Of course, everybody likes to look at SPY and NVIDIA and everything like that in the short term, but this is really going to, I would say, impact yields quite a bit coming at the end of the week, and also could possibly start to swing some of the probabilities of these rate cuts even more.
And then that'll also affect the market, as we all know, not only in terms of like direct repricing because of the rate cuts, but also in terms of just sentiment overall. And what's more interesting than I guess we could have figured before is that over like the past month or so, the market has had some wild swings. So we're already entering a period of higher volatility, and we're at the point now where the market is basically all the way back to its record highs. But at the same time, Jerome Powell better, better come out prepared this year with this Jackson Hole Symposium, because like you alluded to a couple of years ago, back on, August 26th of 2022, he came out firing, and the market was not too pleased with that. But expect more volatility this week. Be ready to adapt and change directions quickly. And we have a lot of heavy resistance overhead, especially with the all-time high so close. But besides that, Tom, there was also some interesting news today with ticker symbol JD. This one got smoked. What's going on here?
Yeah, so it's pretty crazy. They were down 4.15%. It was actually a lot worse. Like pretty much from close to like the low of pre-market or after hours, they were down 11%. But it turns out that their biggest stakeholder, Walmart, is actually selling out of pretty much the entire stake of JD. Now, there's a lot of information here and a lot of different cool things to read about Walmart in these articles, but whenever I'm starting to read and just go through everything, Mike, it's a pretty big negative whenever your biggest stakeholder out of nowhere just decides to sell out, especially being such a big company like Walmart. Now, I will say this, Walmart does say they're going to focus on their own Chinese operations, which is a good sign to me. It's not like they're getting out of JD and they're saying, oh my gosh, we're totally done with China. I think people are going to take it that way maybe, but guys, that's not the case. They're still going to be doing business in China, obviously, but nonetheless, it's a pretty big negative for JD. I guess the only positive is that JD's down so much already over the past year to 2 years that maybe this news isn't going to make it get hit as bad as it could, but I don't know, Mike. It's very interesting, and the China stocks come with a lot of added risk, but of course, this is just another negative in the short term.
No doubt. And I think it also says a lot when we look at JD's intraday chart. Even though it had a mega gap down, it actually held up very well intraday, which shows a lot of strength in buyers coming into the stock at these levels. JD, Alibaba, and all the other Chinese stocks are definitely so much riskier than a lot of their US, I guess you could say, comparables. But with that being said, comes some increased reward. Not only with JD, but with many other Chinese stocks, we have been seeing a lot of bullish options flows with them. So basically, if you're someone who is open to high risk, you might want to look into a situation like this. But at the same time, understand the increased, risk that comes along with it. But this stock is very interesting in the sense of like when it is moving, it moves with a lot of momentum, and I like the call opportunity with a stock like this one, but it has to be played in like a strategic sense, and most of the time that means just buying options with time. But either way, keep a close eye on JD and the rest of the stocks like this one, because they're at a point where their sentiment is so like overwhelmingly bearish, where it presents an interesting reward to risk skew. And it's not that often that you see, in many cases, multi-billion dollar companies down 80% from their highs while also trading at decent valuations. But either way, keep the stock on watch going forward. But another stock that has been taking a beating over the past couple of years is Zoom. And they actually just reported earnings today in after hours. I know we've been hitting on this one all week with their earnings report, but it's looking pretty good in after hours, Tom. So it looks like they're finally seeing the light.
It is. It was up 1.86% today heading into the earnings, and in after hours it popped up around 5%, pushing above that $60 resistance in a pretty good way as they actually beat revenue and beat profit, which is a really good thing to see for Zoom, of course. And they actually raised their annual revenue forecast, which was a good sign there. So whenever I scroll through the earnings, there was a slight miss where I did see that large accounts with customers more than 100,000 missed estimates by a little bit, but year over year, it actually increased still by 7.1%. And that was really like the only slight negative there. For the most part, to see them have a good outlook here, to me, is really the good thing with Zoom, right? Their stock's pretty low right now. Obviously, it's up in after hours, but even with it being up, you go to the daily chart, it's still very low in the grand scheme of things. I know that we look at this stock a lot, and you guys are probably used to seeing this chart, but it's just so oversold and providing a good opportunity, and these earnings are a good sign that might start to kick off a good uptrend here. As you can see, Zoom has been downtrending pretty hard the past few months, and with this move today, it's starting to break out of the channel a little bit.
Yeah, so they beat on revenue, they beat on profit, they had a good outlook, their operating cash flow is up 33% year over year, and this stock is at a point where it's like, it has just been getting beaten down so badly over the past couple of years, where it's like, anyone who would have sold this stock, especially along the downtrend, has definitely already sold at this point, and it is now so low where it kind of like eliminates a lot of the profit potential for new short sellers to come in at this point. So because of those reasons, and because of, you could say, how the company is, even though they're not like absolutely crushing it, they are profitable and they're continuing to grow their revenue, and they have a good outlook, and I think that they have an interesting market position. I really like the, I guess you could say, risk reward like skew overall in the grand scheme of things. For example, the stock fell from highs of like $600 a share all the way down to lows of like 55. That is a mega drop. Right now in after hours, it's around like 62 at this very second. If you look at the stock in like a very simple way, you could maybe set a stop loss like maybe around like 59 or so, and you could have profit targets all the way up to 67 to 72, or maybe even closer to some of these resistance levels around like 75, or even if you want to get a little bit more bold, like 84 or so. So I really just like the, I guess you could say risk reward, and it's definitely a stock that I will continue to have on my bullish radar.
Yeah, exactly. And I think that even like dollar cost averaging into shares to this one for a couple of years could also be another good way to go with it. I know it's a stock that we kind of like for the longer term, but obviously in the short term, though, there's some great momentum, and it would be awesome in the short term to see it start to get up into some of those resistances that you mentioned. Even in the short term, like a little target here of like 64 to 65 could be pretty hot for the rest of this week. So keep it on the radar, Mike. But I know that that's a pretty big stock with earnings, and looking at the rest of the earnings calendar, Snowflake reported tonight as well. Tomorrow before open, we get Baidu reporting, so another China stock. We might see some more movement with the China sector tomorrow, along with Peloton before open. That'll be an interesting one. That company has, Mike, I don't know if we could find one worse than Zoom, but Peloton might take the cake. And then we also have Kava in after hours tomorrow. But the earnings calendar is cooling down a bit, but Peloton will be interesting there.
Okay, Tom, you said you couldn't find one worse than Zoom or Peloton. Let me enlighten you to Nikola. Look at that thing. Jeez.
Oh my gosh, terrible, right? It's almost like they put a fake engine in their car and pushed it down a hill, right?
Yeah, only the real traders over these past couple years will remember that one. But either way, jumping into the next segment of the video, as we touched on a couple times now, SPY is basically at all-time highs. The market has been a little bit stagnant over these past couple days as we have some big events on the schedule. So what would you say are key levels for both directions?
Yeah, so here in the short term, obviously the major resistance overhead now above 560 is going to be the all-time high at 565. Just under the all-time high, I do have some resistance at 563.50 and then at 562.50 as well. So if we start to see the SPY pop up above the high of day today around 562, you got to watch 562.50 and 563.50 before that all-time high comes in. If we do end up pulling back down, keep watching this big support from yesterday. We mentioned this quite a bit, Mike, around that 558 area that ended up being a pretty big low today. So use that as support. If that breaks, watch 556.80, 555, 554.20, and then we'll be getting down into that 550 to 552 range. But that's pretty much what we're looking at there on the SPY in the short term.
Sounds good. All right, well, let's jump right into some setups and predictions then. A stock I'm watching very closely right now is DJT. For those of you who don't know, this is Trump's stock. Basically, it's super volatile, and it's one of the craziest stocks you will see in the market. Basically, it offers good opportunities in both directions, and it's now at the point that it has been continuously bouncing off of around like this $22 area. Again, this stock is crazy volatile, but it had a phenomenal day today as it popped up by over 13%, and the intraday price action was pretty resilient and strong, and it's also at a major support level. So this is definitely going to be on my bullish radar for tomorrow, but understand that this stock only offers opportunity when it's actively when it has active strong bullish momentum. If this stock is just chopping around and not doing much, it's really hard to justify a play with it. But when it is moving in the strong way, it does have that I guess you could say that exponential potential. But either way, it's on my radar for tomorrow.
Yeah, it's a very explosive stock. Mike, I almost think that hell froze over because you mentioned DJT, right? It's a very crazy stock, and it's up 13% today. I really like that support that you mentioned. That's a good one there. I'll definitely keep it on the radar. I was actually watching it quite a bit this morning as it was breaking out because, how could you not when something's moving up 13% in a day? But with my first stock, I'm looking at Lucid, and this one was up 10%, almost matched DJT, which was pretty interesting. But if they end up breaking out again tomorrow above $3.60, I'll be looking for a continuation up with them. Some of these beaten down companies like Lucid and Rivian, and especially in the EV sector, are starting to pop off a bit more in the short term. So I'm going to keep watching Lucid back up. I thought that was a great day off of this recent dip, and I would not be surprised to see the momentum carry over into tomorrow.
Sounds good. All right, another stock on watch is TSM, and I'm looking at this one in a bearish way. This stock has been struggling a lot around its recent levels of around 175. At the same time, it is making lower highs on the daily, and we have been seeing some relative weakness with chip stocks over the past couple of months. Either way, I really like the reward to risk playing this one to the downside, but in a way that is somewhat similar to DJT, it would be ideal for this stock, if looking at it in a day trade sense, to be actively putting pressure on its low of day, as that will, I guess you could say, further increase the bearish sentiment associated with this company. But either way, it's on my bearish radar for tomorrow, and it would be great to see it make a new, I guess you could say a new low of the past couple of days, which would be great. It would be awesome if we saw a solid break below 170.
Yeah, that is a huge whole dollar mark there. I can't believe how good it lines up on the chart. I'm definitely going to be watching that too. There was actually quite a a lot of questions today about TSM, and I've been watching that support very closely myself. But with the next play, I'm looking at Shopify back to the upside again in the short term. In after hours, Shopify is killing it here, climbing even higher. But if they end up ripping above 76.30, I'll keep watching them up. It's another stock that's seen a lot of good price action in the short term, and we're starting to see it. I mean, when I say, recover off of the dip, like some of these recoveries, Mike, on the charts from the past couple weeks are insane. SPY's recovery alone is nuts, but, just look at like the big gap on Shop and just the continuation there even. Some of these moves have been very exponential the past couple weeks.
Yeah, Shopify has been going beast mode ever since August 5th. And like even today, like you mentioned, like it showed a lot of relative strength. So good stuff there, Tom. And besides that, let's jump right into today's momentum plays. And with the first one, we have Enphase to the upside.
Ticker symbol ENPH, looking pretty good, sitting right around 120 a share. So if they break that, then watch them up.
All right, with the next one, we have SMCI also to the upside.
Super Micro Computer, pretty good recovery in the short term, right around resistance. If they can break above 630 even, then watch them up.
All right, and then with the last one, we have NVIDIA for both directions.
Yeah, ticker symbol NVDA going pretty crazy right now. There is resistance in the short term right around 130. They are also in a channel though. So if they break out above 130, then watch them to the upside. But there's a pretty good support as well right at 126. So if they end up falling under that, then watch them back down. And, SPY's been very volatile lately. I would love to see a clear direction get picked here.
Sounds good. So we have the downside level for a potential move lower. We have the upside level for a potential move higher. This is for NVIDIA. Don't forget about SMCI and Enphase as well for potential upside plays if and only if they break through the levels Tom listed. The stronger and more consistent these stocks move, the better the setups become. But besides that, Tom, we are all clear for today's $920,000 big money trade. And we are looking at ticker symbol BAC, Bank of America. So today, the big money put just under $1 million into the 37 strike put options that expire on September 20th of 2024. Looking at this option more in depth, we can see it is a little bit far out of the money, and there's only around like 30 days of time to it. So initially, this makes this trade pretty risky. Looking at this trade deeper, we can see that bank stocks, whether it be Bank of America or even other, of its competitors like JP Morgan or Citigroup or even Wells Fargo, have been relatively weak over these past couple of weeks. With that being said, these Bank of America put options are likely a hedge in the event, you could say, shit hits the fan over these next couple days at the Jackson Hole Symposium, and even just as a form of protection in the event the person who bought these put options has exposure to Bank of America stock. Looking at this play more specifically, it is a high risk, high reward setup where the big money, it's like a form of protection. Looking at the market right now, especially with it at close to all-time highs, it's not necessarily a bad thing to want to, you could say, protect against the downside right now, especially given the current events we have in the short term, but also the events we have lined up for later in the year, like the election. So with that being said, keep a close eye on Bank of America going forward, and I thought this was an interesting big money play.
Yeah, I did too. There's $920,000 into this big money play. The last time that we saw a big money play with Bank of America, it was amazing, right? They pretty much sniped the top on July 18th, and we saw a pretty good move come out of that. So I'm not saying it's going to happen like that again, but looking at Bank of America right now, there is a pretty big resistance that the stock is, having some trouble breaking out above, which is right around $40. So I'll be watching that in the short term, might even throw like a bit of a stop loss area there. But obviously, if you follow the big money, try to follow them as best as you can. But I do like this play quite a bit, Mike, and I love the way that banks are providing this opportunity on the recovery for a possible resistance bounce back down. And I'm glad you mentioned the SPY as well, because I think there's a lot of traders in the short term that are just expecting the SPY to just run to all-time highs like nothing ever happened, right? And I kind of think that we'll see a little bit more volatility in the short term.
Yep, and that's a key point that I'm very glad you brought up, because it is very important to be willing to adapt, especially over these next couple days. The past couple of weeks for the S&P 500 has been great as it just rallied to the upside basically every single day, but in the same way the uptrend has been great, let's not forget that the market was selling off pretty hard in the beginning of August, and it's not necessarily immune to that, especially given the events we have lined up. So be willing to adapt, have stop losses, follow your stop losses, have a plan for any trade you enter, especially over these next couple days, and let's have a great end to the week. There should be a lot of great opportunities presented, and the market is getting to an exciting level. Before we close out, if you are new here, consider demolishing that subscribe button to get our videos recommended to you more often. In every single video, we cover the most important news, information, earnings, charts, and everything you have to know in usually like 20 to 25 minutes or less. So consider destroying the subscribe button to get our videos recommended to you more often. But we also want to give a giant shout out to today's member of the day, Connor, in the StockedUp Discord, who had a great trade today with Target. So awesome job there, and it's awesome to see gains like this one. Keep up the great work going forward. And then also, if you guys have still not tried out Bookmap yet, now's a great week to try it out, especially with the Jackson Hole Symposium coming up. Basically, Bookmap allows you to see exactly where buyers and sellers are lined up in real time, so you can know the ideal spots to, know where to take profits, enter, and manage risk, and all that good stuff. We do have a savings link in the description and comments down below. If you use that link, a special offers tab will appear, which unlocks some nice savings. So now's a great week to try it out, especially with the events lined up. But besides that, thank you all so much for watching, and let's have a great day in the market tomorrow.